Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 25th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Over the last couple of days here, obviously we had the gap up Sunday evening, and the market held our 76 halves. Again, that continues to be a significant pivot in the charts. It was our long-term target, which was forecasted from the August 2015 range, and you can see we finally reached it here and really haven't been able to find acceptance beyond it since. However, that could change. Now that you have bears that have defended, bears that have defended, there could be stops above 1280. They could be targeted for a shot at kind of retrading prices into 2390, 2400. Going to continue to watch 2376 half. This is a clear range here that's developed from 88.75 down to 17.75 with a midpoint here at 23.53, and we continue to trade basically right in the middle of that pattern. And what I mentioned before is that that's an energy building pattern right there. It's what I call a neutral key range, energy building, and it could lead to significant expansion ahead. Given the overall trend has been up, the most likely direction is up. So if we were to break through the upside, we have targets up here, 24.24 and 24.60 basically. Those are the next major upside targets based off of expansion here from this key range. So we would be looking for targets into that zone if price can find acceptance beyond 2390. Until that happens, we could see further back and forth action. We may drop all the way back down to 2317 and come right back up. We just have to see how price responds here off of these 76 halves. Inside day heading into today's RTH. If we look at the intraday right now, there it is. What you'll see is that the current direction is up, and so far bulls are defending value at VWAP. However, again, we're coming into that 76 half, the previous session's high, 76.75. That's going to be the area to watch for early signs of rejection or acceptance. Should price rally into this zone to begin RTH, watch that area closely for rejection, as that could offer a quick return to 74s and 72s and perhaps even across the range. That's going to be something to watch out for. If there's any acceptance beyond 76 half, again, we could be pushing back toward 2390. Let's take a look here at crude oil. Crude oil has experienced quite a bit of volatility here lately. First down out of that tightly coiled range, then back up, and now back down. Significant movement here so far for crude, and we may not be done. This is clearly an increased volatility environment here, great pace and tempo overall on a swing basis, makes for some great swing trades, great day trades at the moment. Again, when you're predominantly in a certain direction, for example going up, it's a great idea to look for failed new lows for a shot at squeezing. Likewise, if you're in a downtrending market, failed new highs could be an opportunity to basically squeeze out these long liquidations. So that's something we're going to be looking for. How does price respond here? This is the previous week's close, that white dotted line. So if price were to push above the previous week's close and fail to find acceptance, that could be a quick move down into 48.42, which is the next key level below. On an intraday basis, let's take a look at this here. Here we go. On an intraday basis, at the moment, trading range bound. The previous session saw some significant selling pressure. This is what we talked about yesterday. I mentioned bears are defending 50.20, and the idea is for a move into the previous close at 49.63 and a move into the lower previous low there, which is about 49.20. We got both of those yesterday. It was a one-handle move down. And then after that, price failed to hold outside of the previous session's range. This pullback was a quick buying opportunity to the top end of the range as a short-term move, and then now that's become an area of absorption. So right here, off 49.15s, up here off of 49.50, 55s, it's two-sided trade, and there's a lot of pent-up energy in here. If there's any failure to hold 49.10, this could get a significant run of the stops to the downside, and that, again, opens the door to much more weakness toward that 48.42. Acceptance above 49.63 would suggest a return back toward previous highs at 50.20. So that's the range, very tightly coiled price action. We could see significant expansion ahead given how much energy is built up in this range. I wanted to take a look now at gold futures. Here's a look at gold. You take a look at the higher time frame in gold. What you'll notice right here is that we've seen a recent pullback, a significant one. I mentioned before, given this squeeze right here, after this rejection day here, the expectation was that we would see more strength to the upside and the next pullback could be a buying opportunity. We thought this might be the pullback here, and we saw bulls defending on an absorption signature, but we knew below 1280 breaks that pattern. That's what happened yesterday and Sunday evening. Now pushing down, we see a rejection tail is formed, but it's not a great rejection on an intraday basis. I still believe that 1263.20 is very, very important here, and that's the major pivot to watch. We could continue to drop in there and see what it's made of, and if bulls are able to continue to keep prices above 63s, we may see that continuation into 1306 finally, and perhaps even higher into 1334 to 1338. Any failure to hold 63s opens the door to 1240 very, very quickly. Let's take a look here at the intraday chart. Looking at this one here, again, very bearish this morning already as price is rejected above the previous session's close right here, 1277.90, rejection off of 1280, and back across the range. And if you look at this range, very clear after we got that move down Sunday evening, 1280 is the major pivot right now. You can see the lower edge of the range down here around 1268, and right now it's two-sided trade in this zone. If price were to come down into 68s or below, it could be an opportunity to trap and bring it back up the range. Likewise, any tests and rejections at 1280 offers an opportunity back down. So a wide-ranging range here, and eventually that could lead to more movement once expansion occurs. Let's take a look at 6B. I wanted to look at the British pound futures here. There could be a significant move brewing. So if we look at this thing in a higher time frame here, check this out. We got a recent move up, huge move up, and after that big move up, 1, 2, 3, 4, 5 days here where we've seen very tightly coiled price action right there. You see down here on the indicator how tight that is so far. And days not in, but that's a very, very clear indication that there may be significant expansion to come at some point. The other thing that makes this opportunity very likable, in my opinion, is that we're sitting just above the previous highs here of this key range. There's a clear range. This trading range action has been very, very clear and defined. So holding just above that high, these highs, if price cannot continue higher, then this can become failed range expansion, and we'd be looking for a move back across the range into 121s. So again, there's a great opportunity for expansion out of this range. Very tightly coiled price action, and so far the measurements on our indicator is indicating that we could see expansion at some point, which could be significant. A push above the 128s or holding above these highs implies a continuation back toward 133s. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.